कानून भले कहता हो कि गुड्स एंड सर्विस टैक्स, लेकिन हकीकत में ये गुड एंड सिंपल टैक्स है।
जीएसटी नहीं है, जीएसटी गब्बर सिंह टैक्स।
We are very close to coming to a final call on some of the very critical issues: reduction, rationalization of rates, looking at the number of slabs, and so on.
Hello and welcome back to Tracking Trends. It has been a month since we began this series. Most of the videos that we have done during this duration have focused on global issues, primarily the United States and Trump's tariffs. Today, we turn our attention to something that is very domestic. Yet, there is an unavoidable linkage between what is happening elsewhere in the world and why we want to talk about the issue that we are going to talk about today, the goods and services tax. But today we take up this issue with an idea that we know the pain points, but what can we do to overcome these pain points? And to do that, I have with me Mr. Najib Shah. Mr. Shah was the chairman of the Central Board of Indirect Taxes and Customs just around the time the GST regime was going to be rolled out. He was there as at its head between 2015 to 2017. He has seen GST taking birth. He has seen the birth pangs. And now, for the last 7 years, he has been writing about the way it has rolled out. And today, we are going to talk to him. Did you expect it to pan out the way it has panned out over the past 7 years? From the promise of a good, simple tax, many people have come to refer to it as Gabbar Singh tax.
I think that's a very unfair comment for what has been a major transformational reform carried out in the country. You must take a step back to 2016 and know what the taxation system in the country was, and then compare it with what the GST set out to do. It set out to persuade multiple states with multiple philosophies, multiple political ideologies to come on the same page and roll out a tax, which we did. So I think the allegation or the suggestion that it is a Gabbar Singh tax is unfair both for Gabbar Singh and for GST. I think we're much better than that. And currently, if you see the tax revenues, if that is going to be a barometer of the success of a tax regime, we have ended 24, 25 at more than 22 lakh crores. The month itself saw more than 1.75 lakh crores. So we're doing well. Yes, there are concerns. We'll address it as we go along in our conversation.
Now, yes, before GST, nobody kind of questions the fact that GST is a much more progressive system than what we had. We had, before GST, we had an excise duty that was levied by the central government that kept changing every year. We had then value-added tax that were levied by states that varied from state to state and from time to time. And then we had sales tax that were levied. Now, all of that were replaced by one unified tax regime. And theoretically speaking, and also going by the experience of many other countries, this was a thing that was to be done. No debate about that. And it has also, in a way, helped the government as far as revenues are concerned. As you said, 23, 24, we raised about more than 20 lakh crore, and in the financial year that ended just now, it could be in the neighborhood of 22 lakh crore. But the question I'm going to ask you is that said, there is still a lot of resentment, a lot of complaints, and in terms of expectations that this should have been a much simpler tax regime, and it hasn't been as simple as it was promised to be. Now, if I were to ask you, what are, according to you, setting aside the accomplishments, the achievements that it has had, what are the key pain points?
A constant criticism of GST is the multiplicity of tax rates. That has been something which has been hurled at GST as being a major flaw. Now, please remember, when we set out to arrive at rates, you had the whole range of goods, from daily use goods to luxurious goods. We also had to ensure that we get the same amount of revenue which we are getting when we enter into this new regime. So we had to balance equity, we had to balance revenue considerations, we had to balance the interests of multiple states. I would urge you to always keep this in mind. Every GST Council meeting also faces this challenge of having requests coming from multiple states which are very diverse economically. In the manufacturing sector, concerns are very different. So when we had these rates, it necessarily had to be multiplicity of rates. An ideal would be to reach towards a single rate. Group of ministers have been constituted by the GST Council since 2020. We are now in 2025. No finality has been reached yet. And these are a group of ministers headed by opposition ministers. So even they, who are the worst critics of GST as regards multiplicity of rates go, could not reach any consensus as to what should be a simple rate. Ideally, we should merge as many rates as we can before we move towards the path of a single rate.
Hold on to that thought. Let me just, for the audience's benefit, spell out. We started off with 5 rates: 0, 5, 12, 18, 28. And then we somewhere pushed in 2 more rates, 0.25% and 3%. So we have effectively 7 rates. That's what was not envisaged in the beginning. So now, let's say we have to cut down on the multiplicity. We will come to the feasibility of it. What is it that, in your view, from 7, what is it that in the first step we can go down to? Overnight, we cannot go down to a single rate. That's the aim.
So let us keep aside the 0.25 and 3. 3 is for gold, 0.25 is for precious stones. Those are a separate class, and they impact a very small percentage of the population as such. Apart from that, we have got now 5 rates. 0 continues as a rate. Though in my opinion, that should not be a rate, but 0 continues as a rate. So we have 5, 12, 18, 28. Now, 5 and 12 needs to be brought together, collapsed together, and brought towards 9 or 10. 18 is your major revenue giving rate. Now, can you bring out 18 and 12, push some goods from 12 towards 18, bring down some goods from 18 towards 15, and look seriously at the revenue impact of these moves? Then you have 28%, which is for a smaller class of goods, the so-called luxury goods, on which, please don't forget, we also have a cess, which was part of our commitment to the states when we got in the GST, that we will make good their loss. Again, it's completely unfair, but that is the only way to go forward to get them all on the table to agree to GST. So we agreed that we will give them a compensation based on the 2015-16 revenue base, assuming a 14% growth. And mind you, not a single state is going at 14%. But that is a way to sort of arrive at a consensus. Others, they spent multiple days on this particular issue because everybody feared that with the advent of GST, there'll be loss of revenue for the states. And it is not so much the loss of revenue which was hurting them as much as the fact that the power of taxation, which was with them and with the central government, was both now being merged in this council of ministers of both the center and states. So I think we can bring it to 3 rates in the first instance, which is a rate which is somewhere in between 5 and 12, and the second rate between 12 and 18, continue at 28%. Look at cess a little more closely. The cess ought to have ceased in 2022. Post-COVID, the government perforce felt that it has to increase the period of cess to 2026. That continues even today.
So what you're suggesting, let's have three rates. One rate could be around 9%, other rate could be about 15%, and continue with 28%. And take a look at the cess. Now, taking a look at the cess is going to be a hugely political question. And what you said, many state finance ministers, while in public, particularly from the opposition ranks, while in public they continue to criticize GST and the multiplicity of rates, but when they get into that GST council meeting, there they just clam up because every state needs money, and they are resource strapped, and they know that cutting down on rates would mean cutting down on revenue, and they just don't want to lose that money. And perhaps that reason also extends to why the cess continues to be there now. But now let me go over to the next question. Now, you said when you were saying 28%, that it should stay there and it is applicable to luxury goods. Do you think now within these slabs, a good deal of criticism has come about because the way we kind of within these rates, also the kind of multiplicity we create for the same kind of goods. We had the controversy around popcorn. If it is unpacked popcorn, it is 5%. If it is packed and salted popcorn, it is 12%. If it is caramel-less popcorn, then it is 18%. Now that just doesn't make sense. It just doesn't make sense. You have been in CBIC, and I can give some more example. Roti is 5%, packaged paratha is 18%, ice cream is 18%, pencil is 12%, pens are 18%. And it really makes no sense. How do people at CBIC make these decisions? Because that's what actually dents the credibility of such a system, that there's a kind of mindlessness that people kind of start suspecting. Yeah.
Well, mindlessness is a very harsh word. It is it's complete ignorance on the part of the taxpayer who assumes the mindlessness of the CBIC. Let me answer you. GST is a value-added tax. Every stage of a manufacture of a product has a value addition, and every value addition tax is captured, which is what GST is all about. And if we didn't want value added tax, we didn't have GST. And what we are now giving you, because we have given you a rate at every value addition, we also give you credit of the tax paid at the earliest stage. Let us take the example, the much abused popcorn. A plain popcorn has nothing. It's sold in loose, 5%. You pack it, there is a value addition. You're not going to buy a popcorn from a seller who's on the road, which does not have any packing. You'll pay for the value packing, you'll pay a higher rate. Now, the guy who has bought it from the 5% guy will get credit of 5%. So what he pays to the government is 12 minus 5. And what GST contemplated was that every stage where there's value addition and credit is being taken, I will pass on, I as in the manufacturer will pass on the credit to the consumer and not charge you 12%, but charge you only what I'm paying to the government, which is 12 minus 5. Now I caramelize it, which means I put sugar. Sugar doesn't come cheap. It also has tax. Now I have sweetened it. Having sweetened it, I have added value to that product. I pay 18. And what I will now do, I will get credit of all the taxes paid in the earliest stage till it came as a caramelized product in your hand, which means I ought to have given you some benefit of the credit which I have taken of not having paid tax in cash, but on the basis of a document which said the taxes have been paid earlier. Which is why when we started off GST, we again brought in this anti-profiteering clause. We created an institution to say that, look, you jolly well pass on the credit to the consumer and don't charge the consumer for taxes we have not paid. That institution has been done away with and now it faced so much of flack because we were able to point out to the industry that, look, you're not passing on the benefit to the consumer, which is what GST is all about. which is that taxes paid on the earlier stage, you get credit, and credit means you don't pay any cash. What the government gets, when I say I have got 1,72,000 crores in the month of March as net revenue, that's the cash I've got. I don't count the credit. I mean, it's a piece of paper for me. And that's what you have got the credit for, and you don't pay taxes on that.
No, theoretically and technically, what you are saying sounds right. And, I had to use the word mindlessness because journalists sometimes have to provoke.
You have.
Within certain limits. But let me bring the other argument. There are sometimes you may also need to forego this very rationale that you are outlining in uh, in in favor of simplicity that may actually help in terms of implementation, both to the tax officials and as well as the businesses. That is one argument. The other thing is also sometimes taxation is also about seeing who you are taxing, because it is also an instrument in the hands of the government to redistribute income or to redistribute burden. Now, let me pick another example. When the government is taxing packaged water at 12%, bottled water, but it taxes water purifier at 18%. Now, I can argue that bottled water actually should be discouraged and therefore should attract a higher tax. Water purifier, the government, despite charging me water fee, is not able to give me potable water. Therefore, I will install water purifier at my house, and I should be encouraged to go for a water purifier rather than order bottled water. But so in certain places, some of these things are kind of there is an inverted logic. I can extend the same logic for air conditioners. Now, I mean, air conditioners today cannot be seen as luxury. Every middle class household has an air conditioner. Lower middle class people now have started buying air conditioners because we are not getting away from rising heat. I mean, there are the notions of luxury goods that existed 30 years ago, and we seem to be also continuing with that in many respects. Let's take another anomaly. Electric vehicles, they attract 5% GST. Now, truth be told, electric vehicles are today bought by people who are actually on the higher side of the income bracket. And there is no distinction between 10 lakh electric vehicle and a 30 lakh electric vehicle. They all attract 5% GST. There are no compensation shares there. But automobiles, even a small Alto vehicle, a CNG driven auto vehicle, which can be as environment friendly, draws 28% plus a cess. Now, don't you think that these things need a hard look?
Number one, we're talking about indirect taxes, which by definition are regressive. I can't make a distinction between an average man on the road, a man staying in a 5-star hotel, or a man staying in a luxurious condominium. So the disadvantage which indirect taxes suffer from is that they are uniform across the entire chain. Unlike a direct tax, this I'm addressing the point which you first made, that taxation should also look at the sort of consumer who's being subject to such taxes. Indirect taxes cannot make that distinction. So number one. Number two, of the examples which you gave, when we moved to GST from the previous central excise and services tax regime, which you didn't mention, as also having been merged in the GST, and the sales tax, we took the weighted average of all taxes for each particular item across all the states in the country. And the rate which was coming was around 14 to 15%. That was the weighted average rate. If you remember, the revenue neutral rate also prescribed by various economists, the last being Arvind Subramanian, was in the region of 15 to 16%. Today, we are at about 11.2% is the average weighted average GST rate across commodities. Which means if every single commodity in the country is subject to 11.2%, I will get the same revenue, which I am now getting without this 11.2%. Now, what has happened? I brought in a 0%. I brought in a whole host of exemptions. Now, this is detrimental to any value-added tax. What happens when you give an exemption? You're breaking the value-added chain. So if in the same example of caramel, if I exempt the 5% guy from paying any tax, he's zero. The next person, 12% gets it when he has packaged it. He doesn't get any credit. So remember, his liability becomes 12% as against if there was a 5% when his liability is 12 minus 5. So every exemption breaks the value-added chain, adds to cost. But try telling that to the political ministers of each state who want exemptions for the products. So the GST Council has given a host of exemptions, right, through its 55 meetings which has held till date. And these exemptions they can't be anything worse for a value-added taxation. Now coming to examples of packaged and bottled water and
electric vehicles.
So there again, there's a lot of credit available for these products, right? Ideally, what you're saying ought to be there. As a tax administrator, I would welcome it. But then you look at the fact that they are getting credit for auto taxes they paid earlier. The liabilities will not be as you assume it to be 12 and 18. Let's again take you back. When you went to buy a product in the pre-GST regime from any market, all you knew was a sales tax, which was 8%, 9%, depending on which duty. But you were not aware of the central excise and services tax, which is there embedded in the product, on which there's no credit available for you. On which so there's a tax on tax. There's a tax on tax happening. Can you hear me, please?
Yeah.
So there's a tax on tax, which has now shifted completely, and we now have only all taxes rolled in one and credit available at all stages. To take the example again of air conditioners now being no longer a luxury item. I'm with you. We need to relook at those items. The EV vehicles, it's a government policy to ensure that we give benefit for non-conventional energy, and we give benefits across the roads. Why many EV products, solar equipment, for instance, are also giving huge benefits, right? So all non-conventional energy products across the chain are getting huge benefits. I don't know, you could argue that they don't deserve it, or they deserve it not to the extent which they've been getting. Or again, should we bring in value thresholds? You made a distinction between 10 lakh vehicle of EV and 30 lakh vehicle of EV. Now again, as a tax administrator, one would not like to have thresholds based on prices, simply because it becomes difficult to enforce it, right? In an example like vehicles, we can enforce it. But if you bring it across multiple other products and commodities, saying, for instance, there's a lot of talk in the GST Council, and one GST Council deliberated quite a lot, that textiles being 1,000 will charge this much, textiles above 1,000 will charge this much. I think that is not a great decision, because synthetic
textiles will draw 18%. If something is valued more than 1,000 rupees, ready-made garment is 12%. Below 1,000 rupees, 5%. I mean, that's exactly what I was trying to ask you. Yeah. Is there a need to take a hard look on a war footing and kind of remove these anomalies?
No, as I mentioned to you, there's the GOM, the group of ministers, which was tasked to arrive at collapsing the rates, reducing the rates, but which in effect, all it has been doing is looking at these anomalies and seeing how to address them. So every GST Council, when it comes out with some recommendations of reduction in rates, is a result of the recommendations given by the group of ministers.
Now let's move on from the rates and go over to, there are also, beyond the rates, there are also issues relating to compliance burden. We still hear GST registration continues to be a painful process for many people. We keep hearing about complaints that even after you apply online for a long time, you don't hear. Then eventually, you have to go and meet an officer, and the good old practices of greasing the palms have returned in some cases. How do you think the government can tackle this?
It is unfortunate because as GST was contemplated, the law said that in case I don't respond, I as in the government, within 3 days, it is deemed to have been given to you. You don't have to wait. That's the law as of today. And we brought in technology to facilitate, to ensure that this happens. Yes, I'm also aware that registration has become a pain point, and that's the critical part of doing business for any entity. And if he has a pain point, even at that point of entry, it is unfortunate. In fact, the latest PAC report has also flagged registration as an issue in GST. I only hope, because I can tell you the law talks of 3 days. The technology facilitates registration. It asks for, obviously, for certain details. You need to have certain details and is linked with Aadhaar, etc. I am not fully aware whether there is some problem in the taxpayer filling in all those details, because even as you talk of difficulties in registration, don't forget more than 2 crore people are already registered. So they have registered all right. Some people have registered without any problems. So I think the government needs to step in very quickly and very fast to ensure at least this pain point at the point of entry into the taxation regime is removed. And GSTN is the agency to do that. I am aware of the fact that the technology will support it. I am not aware whether there is a problem on the taxpayer side or on the technology side. I'm not aware of that. But I think it's unfortunate to say.
Now, for small businesses and independent professionals, I mean, part of this registration issue also is linked to a lot of people also are not very comfortable in managing this online registration. And sometimes things go wrong there. The monthly filing of your GST invoices, all of that, actually kind of has made all of these people dependent on chartered accountants. Actually, more than the GST collections buoyancy, the chartered accountants have seen their bank balances soaring in the past 7 years. And this, in today's day and time, for a lot of people, paying a CA, even if he charges you 2,000 rupees nominally per month, that itself is also a burden. I know. Is there a way this whole compliance burden in terms of paying to a chartered accountant, keeping the books can be reduced, especially for small businesses?
No, but if by definition of a small, as in the GST regime, it is anybody who's under 40 lakhs is exempt completely from GST in terms of goods. Services, 20 lakhs, he's exempt from GST. So you don't pay any GST at all. Now you're talking of a person who's above 40, who's above 20, who comes into the GST net, as it were. And again, we have a composition scheme whereby people whose turnover is lesser than 1 crore will not have to face the rigor of a monthly filing of returns, etc. They do it every quarter. So that's another step which the government has taken to address these concerns. Having said that,
that's for goods.
That's for goods. That's for goods. Yes.
Independent service providers, it doesn't apply, right?
It doesn't apply. That's for goods. So what we now have is, in the event of you not going to the composition for one reason or another, and you are in the GST net, a return every month is critical just for me to know what is your turnover. Because based on the return, what the government again has tried to do is that I try to match my return with your return, meaning that supposing you're a supplier of services and I'm a purchaser of that services. To ensure that both of us are on the right track, we try and match the two, the suppliers and the recipients. It started now. We tried to bring it in 2017. The technology provider promised us it will be done. It did not get done. But finally, it is happening now. So why I'm bringing this point is that I'm hoping that if matching is going to take place, the necessity of me having any further returns from you will reduce. Because I know fully well, here the supplier was told, I've given you 10 lakhs worth of products. And here you are saying that, yes, I've received it. and GST has been paid there. I know exactly how much of GST has been paid. Based on how much of GST you have paid to this supplier, you will take the credit. I'm aware of how much credit is available for you. So there is after one more return where you file monthly return again, where this entire thing is done in a summation of how much tax I've paid, how much credit I've taken, and how much benefit I'm taking out of that credit. So these are the multiplicity of returns which are there. We have been reducing it, but every time I think it's been going back and forth. I agree with you, perhaps this is a burden which can be reduced. But having said that, we must all be cognizant of the fact that returns are a critical part of any taxation. I mean, otherwise, how do I know how much you're paying to me, or how much benefit you have taken, or how much credit you have taken, and if you have taken it correctly? So we could perhaps increase the periodicity. Instead of monthly, you can make it everybody once in a quarter. That's something which the government, I'm sure, will be looking at, provided we are able to ensure no evasion takes place. Because that's another point we really have to address. The evasion has been rampant in GST, and this is despite technology, or because of technology. Because I give credit for all taxes paid earlier. There's a whole industry, cottage industry in the country now, which has cropped up, which is only generating fake invoices. No goods, no services having been supplied, but taxes said to have been paid. They are disappeared. They disappear overnight, and the government is struggling with this evasion. We are losing 1.5 lakh crores approximately every year of such revenue.
We are a jugaad country, so we come up with all jugaad techniques. Talking of a maximum amount of manipulation happens around input credit. But the ones who kind of con the system and get away with it are vanished. But it is also true that a lot of people, genuine GST payers, are also suffering because input credit, lately there is a lot of complaints about delay in input credit. Now, is there a technological provision, or I mean, there are certain timelines, right, by which input credit must go, right? That's not happening actually in many cases.
No. I tell you what. Once I have got documents to show I've paid tax, I take the input credit. You don't wait for anybody's permission. You don't need the government's permission to take the credit. When you're discharging your liability on the final product, to the extent of the taxes paid on the inputs which have gone in the manufacture of the final product, you can take the credit. The delay happens where, in very many cases, the credit accumulated is much more than the final tax liability.
Correct. Which amounts to a refund.
Yes, that amounts to a refund. Now, governments generally are reluctant refund givers. But there is delay. Again, technology has to address it. I think we are improving, but there is work to be done there. We should ensure that refunds are given. We should not hang on to refunds. But that's where it is. Because there is an accumulation of credit in very many cases of the inverted duty structure. Final product paying lesser than the taxes paid in the inputs.
Thank you. We really we spent more time than we had initially planned, but it was worth it because this is such a complex subject that one had to kind of dumb down a lot of things, and which you have done so brilliantly for our audience. Thank you very much. So if I can summarize the takeaway, you are saying there is a need to address the multiplicity rates, and a beginning must be made because it has been a promise that has been hanging for a long time. Two is that exemptions say no to it. Not only put brakes, but start undoing them because they distort the very purpose of the system. You also think that even though many provisions were made to ensure that compliance doesn't come with a cost, some of it hasn't happened. With the help of technology, some of these things can happen, but some would require a lot of administrative initiative and a bigger political will and direction to achieve them, particularly when it comes to resolving the GST registration issue, when it comes to cutting down the delay in refunds, and thus reducing the burden, particularly small businesses, independent professionals. And I would say if there can be no better time than to do them now and do them on a war footing, because a GST GST reform triggered boost is what the economy might just be needing now. Thank you very much, Mr. Shah. Thank you, audience. If you have liked the show, press the bell button, subscribe to this channel, and share it with your peers and friends. And keep coming back to us. Thank you.